Diamonds, it's Jamequa and welcome to my channel where I show you the ins and outs of what it means to be an entrepreneur. If you're like me, you've seen a lot of people on social media setting their 2019 goals of an 800 credit score. You're probably Googling,
what's a credit score? How can I get one? What's the highest credit score you can have? Can a credit score get me a car?
You're in luck because by the end of this video, you'll know what a credit score is, factors that impact your credit score, and a quick method you can use to start or increase your credit score in 2019. Before I start this video, make sure you're subscribed and hit that bell to get notified every time I upload. In this video, we're gonna go over the basics of how to increase your credit score. A little background about me: my name is Jamequa Stevens and I'm the owner of JLS Diamond Boutique, where we provide highly specialized services and products for the everyday entrepreneur. When it comes to your credit score, you need to know what it is, how it's impacted, and how to increase it. What does it mean to have a credit score? A credit score is a summary or average of your borrowing history. You will need a credit score if you don't want to use a cosigner for a loan. A cosigner is a person that agrees to take over a payment or a debt if you can't on a loan. Credit bureaus or agencies look at your credit report to determine your credit score, and banks and lenders buy your information from them. Basically, credit bureaus collect and house our financial information. The United States has three main agencies: Equifax, Experian, and TransUnion. All three of these credit scores can be different, so it's better if you get a 3-in-1 report. I personally like to use Credit Karma, but they only give you two, which is TransUnion and Equifax. On the other hand, my bank gives me a full FICO score each month. FICO scores can range from 300 all the way to 850. Since computer softwares determine our credit score, it is important to know what factors impact your credit score. The key factor number one is your payment history. This counts for 35% of your credit score. Key factor number two is your credit utilization. It's a good idea to keep this under 30%, but if you can do 10%, that's even better. This counts for 30% of your credit score. If you ever want to find your utilization at 30%, all you have to do is take your credit limit and divide it by 3. Key factor number three is your credit history age. If you have new credit, then most likely you're paying more interest. Credit history age counts for 15% of your credit score. Factor number four is your types of credit. It's a good idea to have a good mix of credit. For example, hard assets are cars and houses, and then other types of credit are student loans and credit cards. Types of credit count for 10% of your credit score. And factor number five is the number of credit inquiries you have on your credit score. They usually last up to 24 months on your credit score, and this counts for 10% of your credit score. So I think that 18 is the perfect age to start your credit. When I was 18, I was a freshman in college and I got my first unsecured credit card from my bank. Even though I didn't have a long credit history age, they went off of my credit score and I got a $700 limit on my first credit card. I'm gonna be totally transparent with you all. For me, that was a big no-no because I wasn't keeping track of my monthly expenses or what I was spending, so that card went to collections. After I paid that card off and waited a couple months, I opened up another secured card with my bank, and basically a secured card is when you give the bank money and then they give you a credit card. Then they put that money on a credit card so that you can use it, and that just keeps them safe. So if you're late on a payment, they can use the money that you gave them to pay off that credit card. Luckily, I never had that happen and I still have the credit card to this day. To help you all stay on track with your expenses, I created an expense tracker on my website, and I'll leave the link in the description box below. These printables that I created are very affordable and they're compatible with the classic Happy Planner or a regular 3-ring notebook. So now we're going to talk about a quick method that you all can use in 2019 to increase your credit score. And that method is called piggy banking. This method is perfect for you if you're young or you just want to increase your credit score. So in this method, you have yourself added to your parents, a family member, or a close friend's credit profile. And basically what that does, that increases your credit. So their credit becomes your credit. It does not negatively impact their credit, it just improves yours. And it's not permanent, they can always remove you. But before you decide that the piggybacking method is for you, there's 4 things you need to check the primary profile for. Number 1 is the length of credit. You want to make sure that they have a long credit history. 5 years or more is best. You want to make sure that they have a large credit limit. You also want to check their payment history. You don't want to add yourself onto their credit profile if they have any late payments. And the last one is you want to check their utilization. If their utilization is around 10% to 30%, then that's a good profile to get on. And that is how you get a perfect credit score above 800 in 2019. I hope you all enjoyed this video and found it very helpful. I also have other resources such as ebooks, webinars, and one-on-one coaching. If you're interested in any of those resources, make sure you check the description box below. Thanks for watching this video, and I'll talk to you loves later.